Hi guys, good morning and welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Well, thank God it's Friday. If you look at the headline indices, it's been quite a boring week of consolidation. Last Friday to this Thursday, week to date basis. We've just seen a 0.1% move on the Nifty on the downside. So that's the kind of listless market that it has been over the last few days. But there has been quite a few results that have trickled in, and we've had individual stocks moving quite a bit. Ixigo, a case in point, yesterday moved 20% on the back of good numbers, and equally bad numbers are being punished as well. So today, Axis Bank is the stock of the day that we'll be watching out for. Numbers have been a miss on all counts. Profit took a beating. NII has taken a beating, and of course, they have attributed it to technical factors, because of which asset quality has also worsened. Slippages have increased quite a bit. So yes, we'll have to see how the street really reacts to it. The GDR, Axis Bank GDR, saw sharp cuts last night as well. So entire banking pack will be in focus. Also, Reliance Industries, index heavyweight reports numbers post market hours. All eyes will be on that as well. We'll be taking you through what to expect from Reliance this time around later in the show, and lots lined up as well. For the Nifty itself, 25,250, that level is not being cleared on a decisive basis. Index is really struggling to get past that level, and we've been struggling for direction as well. So yes, we'll be telling you what levels to expect on the Nifty and what stocks to watch out for, and of course your stock related queries will be in focus. We can't forget that. Keep them coming in. We'll get them addressed during the course of the show as well. But before we move any further, take a look at the top headlines at this hour. Well, Wall Street clocked in another winning session with the S&P 500 and Nasdaq closing at record highs, led by solid earnings and positive economic data. The Labor Department reports a decrease in jobless claims for the week ending July 12th, while US June retail sales beat estimates. Asian markets trade with gains, tracking Wall Street cues and easing core inflation in Japan. The GIFT Nifty mildly higher this morning in the pre-open as well. Can see a mixed kind of a setup. Crude oil prices rise on the back of falling US stockpiles and after drone attacks on oil infrastructure in Iraq. Gold prices meanwhile fall, weighed by a stronger dollar and solid US economic data. Axis Bank disappoints in the first quarter. Asset quality deteriorates and also weighs on profits. A tweak to provision policy shaves 620 crore rupees from the bottom line. Slippages rise 70% to more than 8,200 crore rupees due to the technical impact. While Wipro meets muted estimates, revenue contracts 2% on a constant currency basis, and margin also shrinks, but in line with expectations. And index heavyweight Reliance Industries is all set to report its June quarter numbers today. The company is expected to report a 16% uptick in profitability and expansion in operating margin. Reliance Jio is anticipated to report modest sequential growth led by steady subscriber additions, while the retail segment will continue its growth momentum with robust revenue growth and operational improvement. All right, taking you through a recap of what really happened yesterday. We ended at the day's low. It was turning out to be a fairly range-bound session, but second half saw the selling exacerbate. It was weekly expiry as well. So last hour we saw the Nifty give up, in fact, break below that 25,200 mark as well. In fact, just about managed to close around that 25,100 mark. Banks and IT were the top laggards. Metal index, however, saw a recovery from intraday lows led by Tata Steel and JSW Steel. Sona BLW, that was the top mid-cap gainer on reports of supplying EV parts to BYD. That order that perked up the stock, but selling continued in defense names. The likes of Bharat Dynamics, Mazgaon Dock, all of them were among the laggards. HDFC AMC, that hit a fresh 52-week high, reacting positively to results. Polycab, meanwhile, reported good numbers, but stock fell 1% or so post numbers. BSE also under pressure because of a SEBI member's comment of favouring longer-term derivatives. That's something that weighed in on BSE. But Ixigo, that stock was clearly high flyer yesterday, 20% gains on the back of good numbers and good commentary as well from the management. Foreign investors remain net sellers. They sold stocks worth 3,600 crore rupees, almost 3,700 crore rupees in the cash markets. DI buying support continues, 2,800 crore rupees worth of equities bought in the cash market. Put call ratio advanced to 0.94 vis-a-vis 0.92 in the previous session. One addition in the F&O ban list today, RBL Bank. Angel One and Hindustan Copper continue to be in F&O ban today as well. So 3 stocks in the futures and options ban for the day. But to understand the setup for the market, what to expect from banking stocks today, let's bring on board Jatin Gedia, technical research analyst at Mirae Asset, Sharekhan. Jatin, lovely chatting with you this Friday morning. First of all, 25,250 not being cleared on the upside, but 25,001, that is the recent swing low that holds. We've managed to defend that level on the downside. Today, how are you expecting the markets to behave? Global cues are positive, but our issue is more domestic. We are in consolidation mode. And in terms of the Nifty Bank Index, Axis Bank expected to weigh heavy?
Good morning. We at Mirae Asset Sharekhan believe that the Nifty is still likely to consolidate even today between 25,000 and 25,300 on the upside. So these are the ranges with which we are working. Also, we need to keep in mind that this is the third week where the Nifty is correcting. So generally, whenever the Nifty is in the third week, we might get a bounce back from the support zone. Now the support zone for the Nifty is placed at around 25,000, 24,900. So even if we get a mild negative reaction to results that were due yesterday, that were announced yesterday, and over the weekend also, there are some results, heavyweights results. So that might have an impact on Monday's trading session. So we believe that still the Nifty is trading at a crucial support zone, and just in case we get a negative reaction, then 24,900 could be on the cards for Nifty. However, post that we see a recovery because the Nifty generally does not fall more than 3 weeks in a row. So we can expect a recovery during some part of next week going ahead. So 24,900 is a crucial support for the Nifty, and on the upside 25,300 would be the immediate resistance.
Got it. And what about the Nifty Bank Index? Private banks have been under pressure. Yesterday, BSU banks also came under pressure. So on the Nifty Bank in particular, what is the level that you're working with for a support? Because in the pre-open, the Nifty Bank Index is down somewhere around 300 points today.
Yeah, true. That is on the back of Axis Bank reaction. So we believe that yes, we will have a negative opening on the Bank Nifty. Now the level for Bank Nifty is 56,400, where we have support cluster of the sloping channel, and also at around 56,200 we have the 40-day average. So 56,400, 56,200 is the level for Bank Nifty to watch out for. We believe that the downside is possible, but it could be restricted at the support zone of 56,400 to 56,200. On the upside, the immediate hurdle is now placed at 57,000, which coincides with the 20-day average. So I think this 56,000 to 57,000 would be the range.
Okay, got your point. Just about a minute to go for the markets to open. Would like to get in your recommendations for our viewers first.
Yeah, so first of all, we are positive on the cement pack, and hence Grasim is looking positive. Recently, it has seen a mean reversion towards the 40-day average, and in yesterday's trading session, we saw also positive divergence developing on the hourly chart. So we believe that there could be a counter trend pullback in this stock towards 2850 on the upside, and the support is placed at 2700. So that is a buy recommendation from our end.
Okay, those are the recommendations. We're getting the first takes, and it is a fairly mixed start and a quiet one at that, as has been the case over the last few days. Just about higher by 5 odd points on the Nifty, 25,115, 120. That's where we are at. Sensex, flitting between gains and losses. Mid cap index is also trading with a negative bias. The bank Nifty, 0.5% cut on the Nifty bank index. It's holding on to that 56,500 mark nevertheless at the current juncture, but it has of course started with a negative bias as was being expected given the fact that Axis numbers have disappointed on all counts. Advanced decline ratio right now skewed in favor of gainers. Let's see whether that holds or not, but of course let's first take stock of Axis Bank. The stock is down 5%. It was being anticipated that the stock will open with deep cuts. This is what has happened really, 5% cut on Axis Bank. If you look at the numbers, profits down almost 4%, missed expectations. NII, net interest income, was up 0.8%. That was also a big miss. Slippages saw a sharp increase compared to previous quarter, almost 70% up, crossed at 8,200 crore rupee mark. That's also spooking the street. The company has said that they have made some changes to their policy, and according to technical factors, the numbers have taken a hit. But nevertheless, asset quality has worsened. Gross NPAs have come in at 1.6% almost vis-a-vis 1.28% in the previous quarter. Margins have contracted by 25 basis points to 3.8% on a year-on-year basis. And if you look at the commentary, CEO Amitabh Chaudhary has said that we will grow faster than the industry. But the management has said that the slippages, 25% of the slippages actually came from the agri portfolio and rest were largely from the retail unsecured book. But they are also saying that going ahead, the impact will be minimal in subsequent quarters because they have accounted for everything in this quarter itself, and they will not be making any further changes to their policy going forward. But brokerages believe that despite the fact that they have accounted for everything in this quarter, slippages have asset quality in fact has worsened, and despite the one time impact, but they have kept their faith. Bernstein has an outperform call on Axis Bank, target price at 1,300 rupees, and even CLSA has an outperform call. The target price is at 1,350. They've cut it marginally to 1,350 from 1,400 rupees per share. So Axis Bank there on your screens, 5% down. Even the GDR overnight was under pressure. Other laggards, Bharti Airtel, SBI under some bit of profit taking. Eternal continues to lose. It has been on a losing streak of late. Kotak Mahindra Bank down. You have SBI Life extending losses. Pharma names Cipla, Sun Pharma under pressure. HDFC Life also extending losses. HCL Tech, HUL, these are some of the other laggards. But what's holding out is Wipro. That stock is up 3%. Numbers were in line with expectations. Deal wins have been healthy, but street will be watching out for the revenue conversion going forward. It was largely an inline set of numbers, which is why the stock is up almost 3%. Steel names continue to do well. Yesterday they were among gainers. Today as well, Tata Steel, JSW Steel have extended those gains. Hindalco, L&T, Infosys, Hero MotoCorp, M&M, ONGC and BEL are some of the other movers. If you look at the sectoral picture, just want to see which of the sectors is taking the lead. We've seen that the Nifty Bank Index has shed 0.5%. But in terms of sectors, yes, metal sector is once again taking the lead. Followed by you have IT, some bit of green. Yesterday it was the top sectoral laggard. Autos are in fine fettle as of now, and so is the realty pack. That index was also up yesterday. But Jatin, first and foremost, Axis Bank down 5%. Support levels here, and what would be your call?
Yeah, see, definitely the price action has been negative. Now the next crucial support for Axis Bank is placed around 1060, 1050, wherein we have the retracement levels, and along with that the weekly lower Bollinger Band. So there's a decent amount of downside that we can expect even from current levels. So I think the outlook is weak from a short-term perspective.
Outlook is weak. And what's the positioning like on HDFC Bank and ICICI Bank ahead of numbers?
In the case of HDFC Bank, there is clearly a consolidation that is happening, and also news flow ahead of the quarterly results is helping it to stay afloat above that support zone of 1950, 1940. So it's more or less kind of a, tricky situation wherein the um, candles are not suggesting any directional move. It's just consolidating since 26th of June. So it's almost a month. It's still trading within that range. So we believe that even the markets are awaiting the results of HDFC Bank, and post that only we are likely to get a directional move on it. As far as ICICI Bank is
Hmm.
concerned, it is now trading at a crucial support zone of 1410, wherein we have the 20-week average support. So limited downside trading near support. We believe that ICICI Bank could give a surprise and resume its up move. So we are positive on
Hmm.
ICICI Bank.
Okay, that's the view on some of these banking names that will be reporting numbers over the weekend. But Wipro, that's the top Nifty gainer. Revenues were down 1.6% on a quarter-on-quarter basis. Rupee revenue, EBIT margin steady at 17.3% on a quarter-on-quarter basis. So there's a 20 basis point uptick. Uh, Bookings were also up 24% on a quarter-on-quarter basis. The street has taken heart from the fact that the deal wins have been fairly healthy, and commentary as well, has been fairly strong, so to say. What would you do with the likes of a Wipro and LTI Mindtree as well? Because LTI Mindtree has reported good numbers.
Yeah, so first of all, Wipro, post this positive opening, it's again witnessing profit booking at higher levels. So we believe that there could be the overall the IT sector could be in a consolidation phase, and I think the numbers of Wipro were encouraging, but however the uh, price action to the results has not been that encouraging, and post that we are witnessing profit booking. So it could consolidate in a range between 250 to 275 on the upside. So overall, consolidation is likely. LTIM has slipped below its support zone of 5200, where the 40-day average was placed. So there we can expect some deeper correction towards 4800 on the downside, where the 20-week average is placed. So I think both of them, Wipro will consolidate. However, LTI Mindtree is likely to witness some more correction.
Hmm. Okay. LTI Mindtree poised to witness some more correction. But I want to get in your thoughts on Indian hotels as well. The company reported its numbers. They were pretty strong. 20% growth in profit, revenues in excess of 31%. Margins, however, came in slightly lower at 28.2% vis-a-vis 29% on a year-on-year basis. The stock is up 1%. The stock has seen a fair bit of correction as well. Is the risk reward looking good here for Indian hotels? And now the numbers are out of the way, is it worth a look?
Yeah, definitely. This is one space that we like from the hotels space, and we believe that there is a scope or a potential for the stock to rise towards 790 to even 800 from a short-term perspective, and the crucial support is placed at 748. So risk reward is quite favorable for Indian hotels, and overall we like the other hotels as well, Lemon Tree, Sami hotels. These are some of the spaces that we like among this tourism space. So Indian hotels, we have a positive outlook.
Hmm. Okay, positive outlook on Indian hotels. Now we'll shift focus to queries, but before that, what do you do with Ixigo? The stock is down 4% today, but it saw a very good rally yesterday, hit record highs as well. Numbers were fairly good. It's a recent listing, so to say, not much data, but whatever data you have, looking at that, would you expect the stock to clock in higher levels?
Yeah, definitely. See, today you might just attribute this routine profit booking, but however, the
Hmm.
consolidation phase that was happening since last 8 to 10 weeks has decisively broken on the upside. So it's a breakout, price volume breakout. Today, it could be witnessing some amount of profit booking. However, once this profit booking is complete, we can definitely see higher levels towards 220 to 25 in the case of Ixigo. This crucial support is placed at 196. So any dips towards the support zone should be considered as a buying opportunity.
Okay, buy on dips. That's the call on an Ixigo. A very strong run coming in yesterday. Today, of course, seeing some bit of profit taking. But let's shift focus to our queries. First one, SW Solar coming in from Debu K wants your thoughts on this stock. The stock has been in a range, and the last 6 months have not been all that great. What do you do with the stock now? If somebody is holding on to it, it's quoting at 330. Just coming off 52-week lows. Actually, how do you approach this stock?
Yeah, so overall the trend is still negative in the case of SW Solar. However, in line with the market, it has also been rising. Now the level to watch out for on the upside is 362, which is the 200-day moving average. So that will act as a very strong resistance. So any rise towards the level of 360, 362 level should be considered as a profit booking opportunity because the overall trend is still negative. Currently, the stock has a support at 320, 318 levels. So hold with a stop loss of 318 for targets of 360, 362.
Hmm. Okay, that's the view. A hold call coming in on SW Solar. Hope that answers your query. I want to take up a query on Polycab as well. The stock has seen good traction in the last 1 month. Yesterday it reported numbers. They were healthy, but the stock wasn't really enthused. It ended lower by 1% or so. What do you do with the Polycab? It did see a fair bit of correction, but has also been making an attempt to recover. And the last 1 month has given double-digit returns. For the medium term, what is the outlook?
Yeah, so we are positive on Polycab. In technically, it has broken out of an inside bar candlestick pattern on the weekly chart. So that indicates that last week was a consolidation, and post that we have seen a breakout on the upside. So yes, the reaction to the results were muted yesterday. However, that could be because of the positioning. However, we believe that the overall trend for Polycab is positive. We are expecting levels of 7,135 to 7,200 in the case of Polycab. And if someone is holding, then continue to hold with a trailing stop loss at 6850, that is 6,850 for targets of 7135 and 7,200 on the upside.
Hmm. Okay, that's about Polycap. Overall view is positive here. Another query from Alex. Natco Pharma, does it want a fresh entry for the long term? Thoughts?
Yeah, see, Natco Pharma overall, the pharma space has been doing well of late, and we believe that Natco Pharma is at a very crucial resistance zone where we had gap area that was formed on the 13th of February. So we believe that currently it has now reaching its very crucial support zone, resistance zone at 1100. So we believe that if he is holding, then don't venture it at this point of time. Wait for a dip towards 960. If he is wanting for a fresh entry, then wait. Again, I will be suggesting to wait for a dip towards 960 and then enter because it's currently trading at a resistance zone.
Hmm. Okay, that's the view. Hope that answers your query on Natco Pharma. I want to take up this query from Satya on office space. He wants to know whether he should switch to EFC India instead for the medium to long term. Your thoughts on these stocks, office, EFC? Do they merit a look right now?
I'll require the so office. We believe that office is consolidating. It's
Hmm.
consolidating between 600 and 700 since a very since I can say March of 2025. So it's almost 3 to 4 months. I'll wait for the breakout to happen. The breakout level is at around 690. So I'll wait for that breakout to happen rather than just investing and the stock doesn't do anything. So I'll wait for a breakout above
Hmm.
690 and then only enter fresh so that can have a positive momentum which could impact my investment. So as of now, wait for level of 690 on the upside.
Okay, that's the view on office. Hope that answers your query. There's a query I want to take up on Paytm. Yesterday also I took up a query on Paytm. The stock has cleared the 1,000 rupee mark. Komal wants to know for for investment of 6 months, how is it looking right now? Do you see more
Yeah,
upside?
see
Is it
this.
expected to hold on to this 4-digit mark?
Yeah, see, the stock has rallied from around 650 to 1000. So I think she's a little late in, entering the stock. However, what I can see is that we should wait for a dip towards its support zone of 930, where the 20-day average is placed. So if she wants to invest, then buy at support, not at current levels, because it has already run up quite a bit in the recent few weeks. So wait for a good entry point or at the support of 930, and then you can enter. On the upside, from a medium term perspective, we believe that 1075, which is around the all time highs, is likely, but wait for
Hmm.
a dip towards 930.
Okay, wait for dip towards 9:30. You're a bit late here. That's the view. A couple of queries on Wari Energies. You know, this one's coming in from Vijay and wants your thoughts. The stock has, in fact, been on an upswing. Last 1 month has seen a 20% uptick. Do you think it has, the legs to again make a dash at 52-week highs? It's still 500 odd rupees away from there.
Yeah, so we believe that overall the stock is in an uptrend, and the immediate resistance levels that we are seeing is around 3450. So I think she should continue to hold with a trailing stop loss at 3150 on the downside. Overall, we believe that post the rise, we are having some days of consolidation. So that is giving us more confidence that the up move is likely to continue. However, it could be slow and steady, so it would take some time. But we believe that 3450 is likely from a short term perspective.
Hmm. Okay, that's about Wari Energies, but Wari Renewables has also been on an uptrend. The stock, in fact, came very close to 52-week highs today, 1240 it hit. So, any thoughts here? Do you think this is also worth a
Yeah,
look?
yeah, definitely, because Wari Renewables has already hit an all-time high, and post that we are seeing that
Hmm.
routine consolidation. So that is again a positive sign for Wari Renewables, because uh, post this consolidation, we are likely to see resumption of the up move. So this consolidation is a positive sign, and it's trading at a support zone of the 20-hour moving average, and even we can consider fresh entry at current levels. On the downside, 1125 is the crucial support, so that can be kept as a stop loss. And on the upside, we are expecting levels of around 1270, which is the all-time high, and above that 1300. So risk reward is quite favorable to go long even at current levels.
Hmm. Okay, risk reward favorable even now. A couple of more queries to go then. Kartikeya Singh wants to know your thoughts on Senco Gold after the 5% move yesterday. In fact, jewelry stocks have been on an uptrend. Which one do you like within the pack?
Yeah, so Kalyan Jewelers gave a breakout, and also we are seeing a positive momentum in PN Gadgil and other stocks within this space. So we believe that Senco is also has a potential to rise towards 404 on the upside. So if he is already holding, then continue to hold. Uh, on the downside, the support is placed at 355. So we believe that even if someone wants to enter fresh at current levels, then 355 should be kept as a stop loss, and 404 should be the short-term target. Within this space, we like Senco, PN Gadgil.
Okay, Senco and PN Gadgil and even Kalyan Jewellers, that's the call on the jewelry space. Last query for the day, TTK Prestige. Your thoughts on this stock? The stock, in fact, has shaved off almost 17% in the last 6 months. It's just coming off 52-week lows, so to say. Four-digit mark is far out. What's your thought on this stock?
No, I believe that the stock is weak, and any rise towards the level of 680, 690 should be considered as an exit opportunity. Overall, the trend is weak, and post this consolidation, we might see a next leg of the downside, which can take the stock towards 550 on the downside. So, exit is the call in the case of TTK Prestige.
Okay, exit is the call when it comes to TDK Prestige. Well, that was all about the queries for today. If you couldn't take up your queries, keep them coming in Monday. We will get them addressed. But with that, Jatin, would like to thank you for taking out time and joining in this Friday morning. I wish you a very happy weekend and a great trading day before that.
Thank you so much.
Thank you. Quickly take a look at where we are at when it comes to the market. We're down 30 odd points, but we still are, latching on to the 25,000 mark on the downside. We've been managing to defend that level till now. Hopefully, we'll do so today as well. The Nifty Bank Index is down 300 points, and of course, Axis Bank being the top laggard after an all-round disappointment in the first quarter. But to understand what is it looking like for the market, which has been so boring over the last few weeks, let's get on board market expert, big market voice, Ajay Bagga. Ajay, always lovely chatting with you, but the only thing that seems to be keeping us entertained is Trump, because markets have been stuck in this range and not doing much. 25,000 downside, 25,000 to 250 upside. Extremely boring screen. But we've had Trump, talking about tariff rates, then going after Powell. What is your sense? What is keeping you excited nowadays?
No, I think the big trends is U.S. economy is doing well. Yesterday also economic data was good. The U.S. corporate results will come better than the diminished expectations. So far, earnings season has gone well. And third, of course, is the tariff uncertainty. I think it should start settling in the 10 to 15% range for most of the world after all the drama has concluded. That might take a couple of months more, but the markets have become resilient to it, and they tend to ignore it. On Powell, there is a very difficult procedure if Trump needs to get rid of him. And the market reaction is almost immediate. So the bond vigilantes are very much out defending Powell, and more he's become a symbolism for the Fed independence. So there the market reactions are very strong, and Trump has retreated twice already. So we are not expecting that kind of a drastic measure to be taken. Markets have now factored in less than two rate cuts by the end of the year in the US. So that's as far as the US goes. Economy is strong, a lot of policy uncertainty. The big beautiful bill passed, so leading to more domestic fiscal deficit and debt issues. Tariff collections have been quite strong. Nearly $100 billion collected in the first 6 months, 64 billion collected in quarter 2, and that is expected to go up further. That impact on the US consumer, on US corporate margins has still not flown through because of various reasons, but it will start flowing through now, and US inflation will go up. We are expecting at most one rate cut, if at all, in the US, which will lead to a steady dollar. That is not good news for FPI flows into emerging markets. We have seen that in India as well, where July FPIs have become net sellers as well. A lot of promoters cashing out in India, QIPs, OFSs happening, and even the government cashing out at these elevated valuations. So that's not something that provides a lot of comfort for the institutional money in the market when insiders are selling out. So insiders are finding it better to cash out rather than wait for higher valuations. That's a negative. Positives for India, we spent a lot of time now since September at the September all-time highs to now. Time-wise, we have paid the price. Price-wise, we are stuck in a narrow range because there is no catalyst as such. So what is needed is some fiscal boost, some GST cut, some announcements on the manufacturing side, and a conclusion of the US-India tariff deal, which will probably happen more nearer to a 15% rate. I think that will give the markets the next leg up.
Okay, yes, rightly pointed out there's been a lack of triggers for the market, so to say. Here, earnings haven't been all that great till now, whatever we've got. IT was anyway subdued expectations. TCS missed the mark there, but a couple of companies did, deliver in terms of muted expectations itself. Commentary was also fairly okay for some of the companies, but would you look at the ER&D space within the technology pack now, given the fact that even though growth has faltered there, the commentary has been fairly strong with companies sticking to their guidances as well. So, looking at the IT earnings, what's the overall assessment? Should one tilt towards these ER&D companies and other mid-cap names?
Yeah, mid-cap IT is expected to do better, to hold on to better order book growth, and that is what we have seen. Again, valuations are very high. Valuations are not cheap. So it's more clutching at straws looking at IT right now. See, but the correlation of IT performance is with the strength of the US economy. It's not with rate cuts don't help IT too much. More, it's a function of how strong the US macro is. So it should have recovered. By our calculations, by now, IT should have been recovering if the old correlations with the US macro stood. What has changed is the AI part, where AI is really disrupting companies. You have seen Microsoft lay off 9,000, Intel lay out large portions of its workforce, saying that it has lost the AI chip battle and it's kind of hunkering down and becoming a smaller company. So on the other side, you see somebody like an Nvidia crossing 4 trillion. We have seen great results from TSMC, which is lifting the entire Asian market and the semiconductor AI pack. So heavy lifting happening from that AI part of IT. It's not transmitted into Indian IT right now. ERD, I think, yes, I would say there is possibilities and good possibilities there. But right now, I think where the focus of the markets has shifted is on domestic cyclicals. IT will be more, I think, something that will come back into flavor another two quarters down the line when we have more clarity on the end use flow through on AI, on Indian IT companies being able to deliver on AI for their clients. That part has to be done. Right now, the picks and shovel providers for the gold rush, they are the ones who are gaining, and then the data center setters up. But the that investment has to deliver some results for the end companies, and that's where the Indian IT comes in the center of it. If they can create those end users, we were enthused nearly a year back when big Indian IT companies started talking about 200, 250 end users having been created and looking at that. It has been very disappointing. The actual impact of AI on the ground on companies has been so far very disappointing, and that's translated back into Indian IT also losing traction. So I would say 2 quarters more before we get to clarity. Right now, the data center setup, the ERDs, the companies providing the picks and shovels for AI, which is the semiconductor chip makers, the semiconductor machinery makers, the semiconductor software makers. Those are the ones who are benefiting. The pure IT or pure consultancies or even the GCCs have not benefited so much.
Okay, that's the overall view. 2 more quarters to wait for clarity as to how things are expected to pick up for the space. But what about I want to touch upon Axis Bank numbers. Do you think it's a bank specific thing now? Of course, they've changed their policy in terms of NPA classification, and they've said that they're the most prudent now. But given the fact that slippages have risen so much, asset quality has worsened, do you expect to see this kind of or similar pain for other banks as well, or do you think it's a one-off Axis Bank related thing for this quarter at least? And other banks will fare well. Private sector names will, of course, also be under pressure because of margin pressure and the fact that they have higher proportion of EBLR linked loans, right? So, assessment when it comes to private banks, looking at Axis Bank numbers.
Yeah, today, of course, it's an overreaction that we are seeing, and other private banks, as well as the behemoth PSU banks, are getting hit. Overall, the canary in the coal mine was the microfinance NPAs shooting up. And but that has got absorbed over the last 1 year. Shaktikant Das, if you remember, last year itself started pushing the brake on the unsecured consumer lending. So RBI was seeing this coming through, and the credit cycle takes time to mature. What is happening is the very high growth over the last 4 years in the consumer finance segment. That is coming home to roost now. And RBI had seen that, so it had put in some mitigation measures. Now we are seeing, first we saw the weakest part, so-called subprime part in microfinance. That fell. And now we are seeing unsecured consumer part falling. So we'll have to wait and watch to see if this becomes a broader trend. Right now, the macro is strong. Overall, we are not seeing any major disruption in the economy. But what probably the RBI will be looking closely at, that if the consumer inflation has gone down to 2.1, 2.5% ranges, then you have a negative print on the WPI. There is a deflation which is coming through because of US tariffs, because who's paying so far for the US tariffs? The exporters are really paying the price by cutting their margins and offering lower prices. So US companies are actually paying the tariffs. But if you look at $100 good, because the exporters came down from say 100 to 80, 90, the 10% duties on that is being paid by the US company, but the US consumer is not seeing the price rise. That's how the chain is working. Sooner or later, those exporters will give it up and say, we can't function at these negative margins or very low margins. That deflation is coming into India as well. So time is for RBI to cut more to stimulate the economy. I think the gap has become too big between CPI and the weighted average rates that the RBI is offering and what the banks are lending at. That has to come down. Second, GST has to be brought down, especially in sectors like auto, where all the levies put together come to nearly 100% of the cost. So somewhere the government has to stimulate and bring in a fiscal stimulus in various sectors. I think that's needed. Again, that has not been the thinking of this dispensation. It's not happened earlier. Even at the peak of COVID, we didn't see that happening. They like to do targeted subsidies. So probably some targeted measure will come, which will then lead to the economy slowing down. That we can see, and that's why the markets are reacting, or the FPIs are reacting the way they are. The valuations are high. Insiders are selling out. They don't see value in holding on to as much as they are legally entitled to. They are rather cashing out. And it's not small numbers. It's crossed about, with the SBI QIP, it's crossing about 140,000 and crores. And every day we are seeing 1,000, 2,000 crores of fresh offerings coming from promoters. That's not a good sign. It's not because of sheer growth, but it is cashing out that's happening. And the retail in that buy at every dip scenario and buy an every month scenario, retail is absorbing and giving an exit to both promoters as well as FPIs. How long does that last becomes an issue.
Got your point. The one trigger that you mentioned for the auto sector could be a cut in GST rates, and there were reports earlier this week that the government may cut GST rates on farm equipment. That would bode well for the likes of M&M. But there are certain regulatory concerns as well here. First of all, within the auto space, PV sales are still struggling. And then there are other safety related regulations that could weigh in on demand because of an increase in price. The likes of anti braking system for two wheelers from the 1st of Jan 2026, and also recently Maruti also standardized 6 airbags for which the cost the prices for certain models were hiked. Do you think price hikes because of cost pressures could wane on demand even if certain GST tweaks come by? How are you looking at the equation when it comes to autos?
Yeah, see, overall volumes are not there. Volumes are not coming through despite we having some of the finest finance options available. So one way is to cut rates and offer finance at even lower EMIs, affordability. Second is the tax component has gone just too high in the whole auto chain. Third, we are still getting a very poor product for the consumer. It's not safe. It's not up to international standards. So the industry also needs to up its R&D investment and give better products because of the huge amount of protection that the government has offered to this industry. We are getting very poor products to consumers at very high price points. But the companies don't make that great money. So where is the money going? The money is going in the government's pocket. So it's a classical case of killing the golden goose. I think there you need to give a cut or you give some tax break like what China did for the first 2 quarters. They offered a direct subsidy to consumers if they were trading in their consumer durable or their vehicle. Something like that should come in rather than seizing people's old vehicles and putting them in the scrapyard. See, these kind of vehicles, which are now, say, Euro 4 or above, they have a very high, lifetime. And especially the higher end vehicles can drive for 3 lakh miles abroad before you get to an engine overhaul kind of a situation. So for us to be scrapping these vehicles at 10 years, 15 years, that's one backward thing that the government is doing to help the industry. But there is a lot of backlash there because those vehicles have economic utility left. So where an industry is looking at either protection walls or it is looking at a government to come and scrap people's vehicles by a fiat order, I think that shows that the industry is not strong enough. The products are very much poorer than what you get for similar price points. And the big issue is the very high taxes, both state level as well as the GST. Everything that you touch in auto gets taxed as a luxury good so highly. I think there you have to give, and auto can be one boost for the entire economy. It is a big portion of our manufacturing, and most countries treat their auto sector with kid gloves. Out here, after the protection, we really tax them to death, and that is what's causing this lack of better products, better features, and providing the customer a better ride.
Okay, got your point. You said that there is a need for more rate cuts, and recently, in an interview with Network 18, the RBI governor said that given the fact that we've had inflation coming down significantly, and we also know that the stance has been changed to neutral, but that doesn't mean that there won't be more rate cuts. Have you, post the recent data, are you penciling in another rate cut in the upcoming policy?
Yeah, see, option is there, Nandita, because inflation will go up from here on because of base effects coming in. So it won't stay at 2%, but RBI is 4% plus minus 2. So we are hitting that minus 2, the lower bound. So on the upper bound, you used to raise rates. Now, when you're reaching the lower bound, I think it's a good opportunity to cut rates. Second, the real interest rate is just too high for the economy. The argument is the savers also get hit. The fixed deposit rates have been coming down. But, that is a reality. The world does not have such high rates. And when you have very high rates, the government pays more, so it starts crowding out the private sector. Government has a huge debt base on which it continues to pay high rates. Second, corporates have to raise money, and then the sub prime kind of borrower, they pay very high. So it hits the aggregate demand in the whole economy. And this kind of a very high real interest rate is being a very big drag on the economy. So we have an option to cut at least once or twice in the rest of the year. Hopefully, August policy rate cut might be on the anvil, because then the space will start shrinking as inflation goes up by the end of the year. We have been blessed with a lower oil price that's helping. The Russian oil is helping. If, God forbid, there are secondary tariffs on Russian oil and we have to go back into the market, and 10 million barrels go out of 103 million barrels daily production, oil prices might rise and you could have an issue there. So government has done well on fiscal control. RBI has paid a good dividend. It's given a boost to government finances also. CPI is down, WPI is deflationary. You have a deflation coming in because of tariffs globally. Time to act, time to cut once more is what I would recommend.
All right, time to cut once more. I just have a couple of more questions. I'll quickly pose them to you. I want to get in your thoughts on exchange stocks in light of the Jane Street, saga. Volumes have taken a hit post that in the option segment, and now SEBI member has also hinted at the possibility of extending F&O contract tenures. Now, since the option segment is a big revenue driver, where does this leave stocks like BSE? We keep getting queries on our live feed as well. What should one do with stocks like BSE now? What is your assessment, overall view on how things will pan out here on?
See, I frankly think exchanges should never have been allowed to be listed. They are a utility. They are like your power company. They should drive efficiency. They should drive market integrity. Their mandate should not be maximization of revenue. The costs of trading in India are very high. Brokers have taken out that cost with discount brokerages, and what was available to institutions, better than that pricing is now available to retail. It has come online, so there is a huge influx of investors coming in, traders coming in. But unlike where SEBI acted very proactively on the mutual fund side, where it kept cutting down prices, or on the pension, PFRDA from day one was really pricing for the scale of India. The exchanges are not priced for the scale of India. For the kind of volumes they are getting, they are charging too much right now for the kind of services. There is no protection, literally. If a customer has any grouse against the broker, they have to go to SEBI only. The exchange seldom acts against a broker. So for every trade, the cost that you are paying to the exchange, there's not a commensurate give back to the customer. So those revenues have to come down. My thinking is these exchanges should not have been listed in the first place and to become speculative tools. Second, their managements come under pressure then to extract more and more out of this trading market. And that leads to mistakes then, like weekly options and, very superficially high impact cost markets, indices, their options being launched on a weekly basis. SEBI stepped in eventually, but look at this, 1 lakh crore of retail investor losses last year. That's a huge
Yeah.
amount on a macro sense for the Indian economy. So I think that thinking SEBI has to do. Don't, I would say, treat them as utilities. They have a profit markup, and that's about all. And they should keep the market integrity as the first thing. Again, the exchanges had all the details on hedge fund trading on a daily basis, but nothing got done. And SEBI took a year to respond, in which time retailers lost a lakh of crores. So that's just showing you, if you come in as caveat emptor, let the buyer beware, but you charge monopoly pricing. That does not happen in any market. So there the regulator has to think about this, allowing such high charges. And there were very cozy relationships of brokers with these exchanges, where nearly 70% of the exchange charges were passed back in bulk to brokers. The regulator brought in regulation against that, but there are other ways around this which are happening, not very savory practices. So overall, these capital market related, be it depositories, be it clearing companies, be it exchanges, they will do well. It's a mega trend in India. But the way to do well should be through AMCs, through insurance companies, through pension companies, and not through exchanges. Exchanges should be part of our infrastructure. It's like, the roads are made for a 5-year, 10-year concession. And now we are seeing 30-year concession roads are still getting tolled out. So you're really extracting the blood from the stone, not leaving anything on the table for the end consumer.
Sure, got your point. That's about the exchanges. Very interesting view there. But Ajay, I mean, I have so many more questions, but paucity of
Today,
time.
I'm
Always a
sorry I
pleasure
was
getting in
very
your insights.
long-winded because I traveled
No,
last
no,
night
but
and I had a late night. So I was not up to
no,
mark
but
today.
you really put things in perspective for us. That's what matters. But would like to thank you for taking out time this morning, and look forward to more interactions. Once that India US mini deal also comes by, we will of course touch base with you as well.
Sure, sure. All the best to us for a mini deal to come by at a good rate very soon. Yeah,
Hopefully, that's, as you said, the next big trigger for the market. Otherwise, we've been fairly lackluster.
yeah, absolutely.
Thank
Thank you
you.
so much for having me.
Well,
Thank you.
thank you. Well, on that note, to take a look at the market, we've kind of slipped towards the day's low, session low, so to say. But still, we are managing to hold on to that 25,000 mark. But 25,001, that was the recent swing low, key level to watch. But if 25,000 breaks, 24,900 becomes the first support, and 24,800, I think that will be the crucial one, to really call out a trend reversal. But quickly take a look at what to expect from Reliance Industries. The numbers will be coming out post market hours. The stock is trading in the positive zone ahead of numbers. The company is poised for strong performance in the June quarter. The O2C division is poised for a turnaround. Telecom, retail, O2C, these are some of the segments that are expected to deliver growth in operating profits. The O2C division is expected to boost margins this quarter. The consolidated revenue is projected at 2.46 lakh crore rupees according to analysts, up 6% on a year-on-year basis. EBITDA is also expected to increase by 16% to 44,960 crore rupees on a year-on-year basis, and profit is expected to surge 40%, that too on a year-on-year basis. Now, the reported PAT will be further supported by one-time post-tax gain of the 9,000 crore from the stake sale in Asian Paints as well. In terms of Jio, the ARPU, the average revenue per user, is likely to increase 0.8% on a quarter-on-quarter basis. The mobile revenue estimated to grow somewhere around 1.5% on a quarter-on-quarter basis, and Jio is projected to have added 10.5 million mobile subscribers in the first quarter vis-a-vis 6.1 million in the previous quarter. And retail, of course, is expected to pan out pretty strong as well. So, all eyes will be on the numbers from Reliance Industries. Numbers from Axis Bank have been a disappointment, which is why the stock is the top laggard on the Nifty, but it has pared some of the opening losses, but still down somewhere around 4% or thereabouts. And the market, of course, now in the deep in the red, not deep so to say, but still around those crucial support levels, and the breadth has also turned in favor of the laggard. So that's all about how we are looking at the current juncture, but we'll be back with closing bell at 3:30 p.m. So don't forget to tune in for that. But with that, we are completely timed out on opening bell. Thanks a lot for tuning in. Stay tuned to Money Control and have a great day as well. Thank you for watching.